Traders watch this closely as it provides insight into economic growth, a move that could disrupt 1.6 trillion in annual trade and send shockwaves through financial markets. Considering that we can see a new downward movement, so the next objective. Welcome to this week's market analysis. I'm Isan Martinez, trader and analyst at xChief. The financial markets are experiencing heightened volatility following recent geopolitical and economic developments, including the implementations of new tariff policies and shifting investor sentiment. In today's session, we will conduct a detailed technical analysis of the dollar index, SP 500, Euro USD, and Bitcoin using TradingView. With Bitcoin trading below 100k and the US dollar reacting to key resistance levels, it is essential to assess market trends and potential opportunities. Stay with us as we navigate the latest price, action, and key market movements. On Monday, February 3rd at 9 a.m., the ISM manufacturing PMI will be released. This report measures the health of the manufacturing sector in the US. A reading above 50 indicates expansion, while below 50 signals contraction. Traders watch this closely as it provides insight into economic growth. On Tuesday, February 4th at 9 a.m., the JOLTS job opening reports will be published. This data shows the number of job vacancies in the US. A higher number suggests a strong labor market, while a decline may indicate weakening employment conditions. On Wednesday, February 5th at 7:15 a.m., the ADP non-farm employment change report will be released. This report provides an early estimate of private sector job growth ahead of the political jobs report. At 9 a.m., the ISM services PMI will be published. This report tracks the performance of services sector, which represents a large portion of the US economy. A reading above 50 indicates growth, while below 50 suggests contraction. On Thursday, February 6th at 7:30 a.m., the unemployment claims report will be released. This weekly report shows how many people filed for unemployment benefits for the first time. A lower number generally signals a strong labor market, while an increase may indicate economic weakness. On Friday, February 7th at 7:30 a.m., key labor market reports will be released. The average hourly earnings report measures wage growth, which is important for inflation expectations. The non-farm employment change report, also known as the NFP, reveals how many jobs were added or lost in the economy and is one of the most closely watched indicators for the US labor market. Finally, the unemployment rate will be released, showing the percentage of unemployed individuals in the labor force. A lower rate is typically positive for the economy, while a higher rate may signal economic slowdown. This week will be crucial for the markets, with a strong focus on labor market data and economic activity in key sectors. Expect volatility as traders react to these important releases. Now, going into the most important fundamentals of the week, Trump is moving forward with his 25% tariffs on Canadian and Mexican imports starting this Saturday, a move that could disrupt 1.6 trillion in annual trade and send shockwaves through financial markets. While the tariffs are officially aimed at curbing illegal immigration and fentanyl trafficking, analysts believe they will have broader economic consequences. The Canadian dollar saw sharp volatility, with the USD CAD spiking above 1.45 before reports of a possible delay pulled it back. If Trump backs off, analysts expect a potential rally in the loonie. Meanwhile, oil markets remain uncertain as Trump has yet to decide whether Canadian and Mexican crude imports will be included in the tariffs, a move that could trigger an inflationary shock. In other markets, gold has surged past $2,850 an ounce, marking its strongest rally since March 2024. Analysts attribute this to rising market uncertainty and fears that Trump's trade policies could eventually extend to gold. A report from the Financial Times also revealed that traders have withdrawn $82 billion worth of gold from the Bank of England, moving it to US vaults as a precaution. The tension between Trump's economic policies and the Federal Reserve continues to grow. Trump is pushing for tariffs, tax cuts, and lower interest rates simultaneously. But analysts warn that these policies may not align. While markets are still pricing in rate cuts mid-year, Fed Chair Jerome Powell remains cautious, particularly as hiring data signals potential job losses ahead. Beyond North America, analysts believe Trump's tariff war is just beginning. Europe, China, and Japan could be the next targets, further increasing market stability. Investors are turning to safe haven assets with gold, treasuries, and undervalued mining stocks seen as key opportunities in this uncertain environment. With tariffs set to take effect in a matter of hours, the markets remain on edge. Will Trump follow through, or is this just another high-stakes negotiation tactic? The only certainty is more uncertainty. The cryptocurrency market also saw a sharp decline after Donald Trump announced new tariffs. As a result, Bitcoin dropped below $100,000, while altcoins like Solana, XRP, and Ethereum suffered average losses of 15%. Economic uncertainty and trade tensions have driven investors towards safer assets like treasury bonds, negatively impacting Bitcoin and other cryptocurrencies. While BTC is often seen as a long-term safe haven, its price remains heavily influenced by market sentiment and risk aversion during times of uncertainty. Analyst Michael Van de Pope noted that large investors are taking advantage of the volatility to accumulate more Bitcoin, while retail traders panic sell. With tariffs set to take effect on Tuesday, February 4th, markets remain on edge, anticipating further volatility in Bitcoin and altcoins. And now let's continue with the technical analysis of the most important assets. The first asset that we will analyze is the US dollar index. As we can see, the last movements of the DXY were big downward candles. These may be related to the latest news of Trump with Mexico, because he put in a hold the tariffs for 1 month. Considering this information, we could see the DXY trying to reach potential bearish targets. The first target that I will consider is 107.785. The second one is located here at 107.500, and the last one for this week can be located at 106.969. These three targets can be critical because we have a lot of liquidity in each one of these points of the price, so it's highly probable for the price to have a reaction at any of these points of the DXY. Furthermore, we should also consider that a correction of this downward movement, and that means that we can see a bullish movement in the next hours. Interesting targets for the bullish traders could be this one located first at 108.669, next one located at 109.301, and the last one for the bullish traders located at 109.788. These 3 points of the DXY would be strong take profit targets if you are trading in an upward movement. Now we will continue with the SP 500. We have seen a strong downward movement from the $6,116 to $5,923. We have already completed this vacuum block that was pending the last week, but now we are trying to see if there is a possibility to reach this bearish target located here in this vacuum block at $5,881. With this movement, the SP 500 can make this new downward movement to try to have more liquidity from this point of the price to be also efficient, and after this we can see a new upward movement. If the price doesn't find enough liquidity at this point, then we can have a last objective, a last period objective that can be located at $5,780. On the other hand, we can also consider targets for the bullish traders. A few good zones to consider would be the first one located at $6,079, and the last one located here at the bodies, not at the all-time high, just at the bodies of these candles with $6,119. In my opinion, if the SP 500 doesn't recover in the next sessions, we can see a deeper downward movement that can let the SP 500 reach bearish targets. The next asset that we will analyze is the Euro USD. We come here with bad news, and that's because the last time we have seen that the Euro USD tried to make a market structure shift from a downward movement to an upward movement, and it was clear that the price was trying to do it, but with the last news related to the tariffs that President Donald Trump is putting to Canada and to Mexico. There is also a possibility that he will try to do the same with the European Union, and that can affect the Euro USD. Considering that, we can see a new downward movement, so the next objectives, at least for me, would be located at 1.02308 and the last one here at 1.01775. After this, we have analyzed before that further objectives located at bearish points of the price of the Euro USD can be reached. And if this happens, we need to consider weekly objectives of the Euro USD. And the first one and the most important one, the point of the price that we should not reach, is located here at 0.95361. Those are bad news for the Euro USD. So if you're trading this asset, take this into consideration. The last asset that we will analyze is Bitcoin USD. And as we can see, this asset made a strong downward movement from $106,000 to almost $91,000, making a loss of almost 14% of the price in a matter of 2 days. After this downward movement, we are seeing that Bitcoin collected enough gas, and there is a high possibility that after this we can see a new upward movement with Bitcoin to try to reach the last objectives we had located at $107,051. And obviously try to reach the $110,000 and $120,000 as one of our main objectives for Bitcoin. On the other hand, if you are considering bearish targets for Bitcoin, one solid target can be located at $94,111. If the price of Bitcoin wants to keep this downward movement, this will be the first objective, followed by $91,178. And finally, one of the targets we established the past week, located at $86,672. That concludes today's market analysis. If you found this session insightful, please consider liking the video, subscribing to the channel, and enabling notifications to stay updated with our latest content. For those looking to enhance their trading experience with professional tools and market insights, visit xChief.com and register today. Thank you for watching, and I look forward to seeing you in the next analysis.